Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. Hope everyone had a good 4th of July weekend. So today we're going to go through, we'll do our normal market update. I'll give you an update on the current earnings trades out there. And then Joe's going to talk about some symbols of interest. I think, FAANG type stuff. So that's the agenda. Let's get started. All right. Okay, so you can see everything over here, are all still state 8. Actually, it hasn't changed much. The green pie, we went from 19 to 22, so still technically oversold. Anything below 30 is oversold. But just kind of a choppy market, not much kind of violent swings, but that's right about where we were last week. Is where we are right now. So here's current state percentages. You can see state 8s are still dominating, not getting much action down here in state 1s. We look at the lows. I'm trying to get them to fix that color. It should be green for the highs, but you can see those are flat line, but we're getting a little, gotten a little movement up on the lows here. Nothing above 1,000, but still pretty decent action. So, just kind of normal, market conditions, since pretty much the beginning of the year, we're just getting some dwell times, maybe a few run-ups, but just generally trending down. I think overall, we talk a lot about the, where the indices, I mean, 1,700 and 3,800 are kind of the keys, and we're pretty much right, same place we were last week. So not much has changed on that front. Let's look at the bullish bearish real quick. So still really high, overall bearish 77, and we topped out there about 87, so we've dropped about 10%, but it's not really doing much for the market. We're just kind of holding pattern. We spiked up and then went right back down, and we're on those kind of key levels. So let's look at excuse me, SPX. So we're the key thing to look at here would be that target 3 down here. You can see we had to test down here. So that's going to be the key level to the downside, 36.72. We're right pretty much at the 3,800. So it's just been kind of fighting back and forth on that level. So, obviously that's the first thing you want to watch is that 3,800. If we can continue staying above it, we'll see. We did have a nice spike up at this, reversal right back down to pretty much, that 3,800 level. So, the key thing there is target 3. If we break below there and hold, then we can have some pretty big movement down. But overall, I'll pull up the chart here. I'll outline these here real quick. So 3,800. The top of that level is at 42. So we're still it's fighting back and forth on that key level. So that's really what you want to watch. If we can stay below the 3,800, then this is our range down here, down to 3,400. So just kind of watch the 3,800, and then on the modeling that target 3 to the downside. That's key things to watch. On the upside, let's see here, possibly, that 50-day EMA, that's 4,000. That could be something you want to look at to the top side, other than, our 4,200. So, if we do stay in this range here, 38 to 4,200, I'd watch that 4,000 on the upside if we make a move up there. But so that's it on SPX. Let's pull up Russell. So, still state 8, pretty much doing like an average move so far. So we'd expect it to, at least try and run down to the average move, which is a 10% drop from, the entry price of 1,800. So, the key levels here obviously is 1,700, right in that, and we're pretty much right on that still. You can see it's about here at 1,700. So, if you can see it's just fighting back and forth on that kind of critical level. So, if we can stay above it, then, obviously the top end to that is at 1,900. But, based off of, it just appears like, okay, it's doing the average move. So I would expect it to run lower at this point, at least try and get to that, between target 2 and 3, for like a 10% drop. So, when it's modeling well, then, you kind of assume that it's going to follow the typical pattern. So that's what I would say right now as far as Russell or key levels. So we're pretty much right on one at 1,700. So, and fighting back and forth, to the upsides at 19. And then down below would be, if we maintain below that 1,700, then the low end of that would be 1,500. But, you can also watch the EMA on that as it gets closer and closer. So it's at, a little above 1,800. So that could be, topside resistance, but really it's all about that 1,700. And then, from there, how far we go down, will it test that target 3? Obviously, SPX, I think, would break obviously below target 3 before the Russell gets down there anyway. So, just keep your eyes on, feel like a broken record, talking about 3,800 and 1,700 for these two indices, but, they're just fighting back and forth on those. So a lot of good articles out there. I'll pull up the Fed tool first here. So 90%, we're still quite a few weeks. This is the end of July. So it did, the movement has kind of gone back towards 75 basis point. So, as we get closer, we'll monitor it. But nothing too big going on there. I think this one's still 50. So nothing big there. I did want to pull up the rates. We didn't look at this in a little while, but you can see like the 10-year, which is, the key one that we watch, it's pretty much the same as the 2-year. So, you can look at it's pretty much like a flat, very slightly inverted curve, but pretty much flat across the board there. So this one's being driven down, but that's the key, the 10-year, is watching that. So we've had huge moves in that as volatility continues. Right after the Fed meeting, got up around 3.5 and then just tanked. So, the last low, I think Joe was talking about this, was like 275. So we got around there, but not quite that low. So that'd be something I'd keep an eye on. Is this going to be, higher lows, continuing, excuse me. Had to get a drink. Higher lows going there, but this is definitely being pushed down. Still trying to figure out, why this got moved. The movement is so drastic. You don't normally see this in, these markets. So Still trying to figure it out. I haven't solved it, so I'll keep working on that. The balance sheet, still trying to dissect all this, but you can see, since June, pretty much they haven't, the balance sheet has actually increased, slightly. So they're not, as of this reporting, they're not getting rid of assets, quite slightly gained there. So there was a great article, and I'll put it in the chat. And this Sudhir sent it to me, so I wanted to send it out. I mean, it kind of makes, basically it's just talking about what's going on with the Fed, the repo, overnight repo facility. You can see the exponential growth. This is just from this year here, 2022. So since March, it's pretty much just skyrocketed. Where there's over 2 trillion in funds. So what they have to do is basically, pay the interest on this. And as the rates go up, it goes higher and higher. So this is, we talk a lot about, the Fed being trapped. They're having to create, pay out all this money, which is inflationary, and they have to raise rates to combat the inflation. So really, it's just, it's a catch-22. So I'm not sure how, this is all going to, pan out, but, as the rates go higher, they're going to have to pay more and more. So it's, damned if you do. So just, very good article, but worth, it's probably like a 4-minute read or something like that, but definitely worthwhile. And just the same thing, Raphael said this, I mean, the same with, the federal government, as the rates go higher, they're gonna, interest payments on that massive amount of debt. I don't even know, I can pull up the debt clock. I don't know if you guys have seen this before. Let's see here. Yeah, national debt clock. Yeah, so 30, so huge amounts. Not even talking about unfunded stuff, but as the rates go higher, the interest paid, goes up higher and higher. So it's just really stuck in a bad situation here with the Fed. So just kind of wanted to throw those out there. I'll open up to questions, comments about the market overall. Anyone?
Hey, Josh.
Yep.
Later. Hey,
yep.
And I realize nothing is kind of working as it should. So let me preface by that. We're saying that the S&P may get lower before the Russell. And we've always, in everything I've ever seen, the Russell usually leads the S&P.
Oh yeah, usually.
And so I'm thinking, well, maybe we're in one of those unusual positions. I went back and looked. Well, I think the Russell leads on the way down, and I think the SP leads on the way up. But that's just me and what I've looked at. What thoughts are you thinking when you look at this, when things are not as they should be, let's say?
Well, the Russell did, it led the way down. So I just pointed out that this target 3 is a lot closer for SPX than Russell. That target 3 is a lot further away. But
okay,
yeah. But I mean, as far as like levels down, the Russell's like one lower level than SPX on for the move down. So
okay,
yeah, so that it continues to lead. I think looking for bottoming, the Russell would probably be that like XLC, which has been crushed. Those things would be kind of where we'd at least try and get some indications of any kind of bottoming for the market. So I'm not seeing that yet.
Right.
So yeah, but the Russell usually leads down, so it's no different this time. But I think I was just pointing out that target 3 was closer for SPX, so you could keep a good eye on that. So
Okay,
mhm.
thank you.
Yeah, thanks, Lee.
Yeah, this is Dave. I'd comment on what Russell was saying there. The Russell, I think, probably does lead when the market actually has a direction, whether it's direction going down or direction going up. I think in a new change, I think the Russell will tend to lead. We'll see. Time will tell here. But I don't know that we have a direction in the market set yet. So I think the market still doesn't know where it wants to go or how quickly it wants to go anywhere. And it's going to take a couple more Fed meetings to shake that out, in my opinion. So I think we're going to be kind of range bound to some degree. Now, VIX is high 20s, but it's going down as we're making new lows, which is kind of scary. Because if there's another jolt, that would tend to make me think we might go another leg lower. So I'd rather be range bound down near the bottom than having VIX at 35 right now. But
yeah, I haven't looked at VIX recently.
Yeah,
Let me pull it up.
This morning.
What's that, Dave?
This is Joe.
Yeah, go ahead.
I would piggyback your comments just a little bit about the range. I think that we do have some upcoming releases, CPI, PPI, GDP in the last 2 weeks of July. CPI is actually the 13th. PPI is a day later, the 14th. And then I think you had asked last week, GDP is the 28th. I think they'll all be, market movers. And then, we're getting into earnings season. And I think these forward looks, these executives have to be, I would think, completely, perplexed by the volatility of everything in their businesses. So, any guidance in forward looks is going to be, I think, critically important, as it always is, but maybe more so now. We may hear less of it because of the volatility. And I think in a way that gets back to, it's going to be a stock picker's market. But, I think those announcements on potentially, as early as the 13th, that CPI may get us out of, the short-term range that the market seems to be in at this point.
Yeah, that's a good point. Yeah, the inflation reports are definitely moving markets, so definitely pay attention to those, right? So you said next week we get some, Joe?
What's that, Josh?
You said next week we get some ratings?
Yeah.
Okay.
CPI is the 13th, PPI is the 14th.
Okay. All right. Yeah, thanks, Dave. Did you have anything else?
Nope. That's jobs report, I think, is Friday, so that's the first one out. But I think the recession GDP is going to be the biggest one of the bunch, just my own opinion. But they're all in July, so we should a couple more meetings, and maybe we'll have some direction.
Yeah. Yeah, I've heard or at least the Atlanta Fed is showing negative for this quarter right now. So that would be technically a recession. It's 2 negative GDPs in a row per quarter. So we'll see, but that's what I've heard. It's negative right now. So.
And Josh, I think that negative, I think that they're down like 2.1% or something. I mean, it's a pretty big negative.
Yeah.
But again, that's just one. But I was surprised that the magnitude.
Yeah. Yeah, I was too. I was expecting like a minus 0.2 or something, but that's more than it was the previous quarter, which was down like 1.6 or something like that after revisions, So it's not good. not good overall. Okay, yeah, thanks, Dave. All right, anyone else? Questions, comments, dissenting opinions on the market? No? Okay, I was just gonna pull up the earnings. I'm tracking all the earnings. So as you can see, day by day here, still a lot of estimated when they came out. So obviously didn't do those trades. There was one this morning for like LNC, Lincoln National. Yeah. So those trades, I'll put that one in, but I want to pull up. This is our new UI. So I have to log in with my other account here. So anyway, so you can see, it's 3 open positions. We had 1 close out for profit travelers. That was also like a study at the same time. So but otherwise, these are, Capital One, and we still got some time, a couple weeks left. This one has like another week, so marginally down, flat. So yeah, just going to keep tracking those as they come out and keep you guys updated on them. So, but as earnings season picks up, we'll get a lot more trade notifications coming. So, but that's it on earnings. I think that was about it for me. Joe, did you?
Yeah, Josh, I'll pull up a couple charts.
Yeah.
If I could share the screen, maybe.
Sure. There you go.
Okay, thank you. So, yesterday was, well, we had the big pullback in oil yesterday, which, was kind of interesting. I don't know if we're still $100, below $100 or not. But one thing, and again, the market on a day-to-day basis is one thing, and that's really kind of all I'm talking about. But yesterday was kind of weird. I thought, now we're coming out of a long holiday weekend. Markets were down. Then the NASDAQ, really started to, lead a rally yesterday. We've had a few days over the last few weeks where, the market basically closes higher than the intraday lows, which, feel god awful in this bear market, as we all know. But I just thought yesterday's action in the NASDAQ was a little peculiar. It's obviously still stayed 8. We're well past, the current number of days. So, you could obviously get a rally anytime. I think, as folks were pointing out, just we're a little bit range bound now, and I'd say the one constructive thing is, a fair number of these charts we've had higher lows. Not appreciably, but they're higher lows. But for the most part, none of those lows have exceeded, the recent highs also. So truly range bound. Couple of the charts I pulled up yesterday. So, and this is what really caught my eye first. I mean, this dreadful Facebook, Meta, it was up like $5 yesterday. I was like, I haven't seen that forever. And so, just went into the chart and, we bottomed at 155 on the 1st of July, last Friday. And, we're up to 168, which it's a hell of a move. Again, this thing's been getting crushed since last September. It actually, is when Facebook started getting crushed. So, that's what caught my eye. So I just started looking a little further. More than anything, it just suggested that we're range bound. Go back to the charts. Here we are in Apple, an appreciably higher low, over the last week or so. Still stayed 8, not even up the average number of days in state 8. But as Josh always talks about, those flows of the charts and getting to the different levels. You can see how, level 2 there at basically 130, has held in Apple. So for me, in terms of direction of the markets, it's a combination of, these big announcements that are coming out. And then, what are the charts showing us? There's Apple in the short term. But again, at 142, we're well off that low of about a week ago at below 130. a couple weeks ago. That was, middle of June. There's Apple. What else? Google. Google actually, pretty tight range here. And I guess, Google, I think the recent highs like 2,385. We're kind of in the middle of that at this point. So again, just checking to see whether these, one-time leaders can trade to higher lows outside of this recent range. Netflix, nothing, nothing to talk about. But that's another one though. Just maybe to keep an eye on. Amazon as well, which had the split. There's Amazon over the last six months. So just a few that I'm looking at just to see if there's any new pulse, in the market to the upside. As Josh pointed out, there's XLC, a little bit of a higher low, but nothing really more than range bound. What's the last one I have? Oh yeah, IBM. So, and IBM, we talked about this, probably 6-8 weeks ago, and just the importance of strikes. And I think, we're maybe Sadir had talked about how, in the bear market, he had lowered certain strike selections, with his bull put spreads, which I think makes all the sense in the world. I think at that time, maybe we talked about being somewhat comfortable being short the 130 strike. But IBM, to me, is just, as Josh talks about, these target levels. And look at how target 3 has proven to be resistance in IBM. And, I'm certainly no expert in the technology field, but, IBM, chart to me is one that looks pretty good. They've done very well on their last earnings announcements. One of the things that Josh and I are in the process of putting together are different ideas for big winners. Our philosophy at Delphian is really singles and doubles, and we'll continue to espouse that philosophy. But we'd also like to throw out the idea of big winners from time to time. I mean, in my gut, it wouldn't shock me if IBM came out with some, really good earnings and we blew through that T3 and took off to the upside. But, we shall see. Their earnings are, about a couple weeks out. So that's just a couple ideas. Nothing else. If anybody has anything they want to talk about or any questions, no, I'm certainly game. And that's it from here, Josh.
Okay. Yeah, does anyone have questions or anything for Joe?
Could you take a look at Intel? Tell me what you think on that one.
Mm-hmm.
You want me to pull that up, Josh?
Yeah, sure.
Is it state 18?
I'm not sure. I haven't looked at it recently.
Yeah, I haven't.
While you're looking for that, I could tell you, Gene, that Intel State most likely is going to be pinned upon the CHIPS Act getting passed. So that's a news item that's going to drive the stock, and it'll be a volatile one way, probably up for a short period of time after that. But watch out for whenever that happens with however.
And Dave, it's, that CHIP Act. So, I think I've mentioned from time to time, I put myself through listening to Kramer because I do respect his knowledge, and I guess, and I DVR it so I can go back at different times when there are inflection points in the market. And last Thursday's show, he had, I don't know, some high-ranking government official. It was a woman, and all they were talking about was that act. And I guess the politicians have loaded that thing now with all kinds of absurd pork, and that's how they do their business. But Taiwan and others obviously are lined up to take this, business away. And Kramer's pushing for it hard. I think that the deadline is, and Dave, you follow this stuff close, late August, early September. I think that this thing has to go through, was what they were talking about the other night, or, it's going to go to another country. So, but I think that's a really good point, Dave. That's a damn important piece of legislation that right now is going nowhere because of all the pork they've piled into it. And Gene, you know, just like Josh, I haven't looked at this chart in forever, and I'm like, oh my God, that's exasperating. How bad that chart, how bad that chart looks.
Yeah. And I need more information on that CHIP Act. I guess I wasn't educated on that or familiar with what's going on there.
There's, you know, government subsidies. I don't know if it started in Ohio, but, you know, and Dave, is it Intel that's talking about building, you know, the massive, you know, plant in Ohio? There might be something being built in Texas. I'm sure if you Google it, it'll come up. But it's extraordinarily important. Dave, anything to add specifically on that?
Yeah, I think there are a couple of fabrication plants slated for like the Columbus area. And just Gene, for your info there, actually the high point in that piece of legislation is to promote fabrication or plants being created here on the US soil, to kind of offset the subsidies that other foreign governments are giving to put a plant on their soil. So right now we're at about a 50% disadvantage, and that's why I think there was one big announcement not too long ago that the company was not going to, I think it was Micron, said that we're going to build another plant, but it won't be in the US because it's too expensive here. So that's what that legislation is meant to kind of offset the unfair subsidies that other countries are luring away business. Like if it only costs you half as much to build a plant somewhere, build it to where they are, you know. So and the pork barreling is the problem that's keeping the legislation from going through, like Joe just mentioned. So the here's how to take that into account, though, if you're going to trade or invest accordingly, is if most of the money is for fabrication, the plants will take 2 or 3 years to build. There'll be capital. Each of the companies that signed on to promote that, which Intel was one, I think most of the U.S. manufacturers signed on and said, yes, we need this CHIPS Act. But the ones that go ahead and then build will have CapEx expenses for years, and investors don't like that so much. Investors want their cake and to eat it too. So, this is going to be look for a pop in a lot of the semiconductor chip stocks when the legislation does get passed, but then look for the analysts to come down. Well, that's just going to increase. It'll be harder to get returns from those companies that are going to go out and then spend their own dollars to add to whatever they're going to get from the government. So it's a kind of two-sided sword there. Just and the timing is going to be kind of critical here. Look for an up blip is when the legislation gets passed, and then sort of a downtrend after that, because there's only going to be building, and profits are going to get hurt until they can reap the benefits of the new plants 2 or 3 years from now. That's my take on it anyway. That's my take on it.
Oh, well, thank you guys, because I wasn't aware of that. Yeah, I was just kind of scrolling through some things, trying to figure out,
And Gene, I'll just a couple comments on the Intel chart back to your original question, then I'll give it to Josh. So obviously it's oversold. To me, it's nothing but a bottom fish. I always look at the earnings, on the bigger chart to see what kind of reaction did a stock get post earnings. And there's no indication that, there's been anything positive come out of earnings announcements with Intel. So is it oversold? Obviously, it's ridiculously oversold, but to me, it's just a bottom fish, and it's, nothing I'd have confidence in, on the bullish side. Josh?
Okay,
No,
thank you guys.
yeah, I'd agree. I mean, if you just hold it there, Joe, real quick. Like if you look, it's all 8.7, 8.7, like the opposite of our, you had 1.5 there, but pretty much, 8.7, 8.7, like classic bear pattern. We look for, bullish stocks doing 1.2, 1.2. This is the opposite. So, it'd be tough to, get along, but maybe the legislation, possibly, but that's pretty
What, no
ugly. I
call
mean, there's,
spreads, guys?
what's that?
I said, what? No call spreads? Probably no premium, huh?
Well, Gene, I was just going to say, maybe you're comfortable selling the 35-30 put spread. You could do a call spread too, but that I don't know what the 35-30 put spread would bring, but that's a credit. You're going to be getting along somewhere, probably around 34, between 33 and 34 with the credit. So
Yeah, possibly like a long-term thing, I wouldn't try and trade it short-term.
Yeah. Okay. Thanks, guys.
Mhm.
sure,
I got a comment, Dan here. Can you hear me?
Yeah, Dan.
loud and clear.
Yeah, I mentioned part of this a while back. I spoke with a guy that was one of the head engineer marketers for Micron, and I asked him when the chip shortage started, if Micron was trying to expand or build new factories and stuff, and he said actually not. He says they love this shortage because they can maintain their capacity, yet they have they can dictate the price of their chips up, so the profitability is much higher for what they produce. And thinking forward about what we're just talking about with the CHIP Act and building more capacity in factories, I think as they build these factories, which is going to take a while, but during that time, if we go, with the inflation, people purchasing less, look at cars. I think the car industry may be in trouble because people are not buying cars. They're holding on to their purse strings. So things like that would bring the demand for the chips down, at a time that they're building more capacity. So I think there'll be some reluctance with the chip companies to start building these factories. I think they can see that it'll kill their profitability going forward, but at the same time, on another separate comment, when we're looking at stocks like Intel, there's so many that have just been really beaten up. There's one I've been looking at, Labo Biotech ETF, and it's just got decimated. It's hard not to buy it at the levels that it went to. Went from a high of like one's over $100 down to like $4, and it's been making some pretty big gains. So I don't know. It's I think the market is still, I think they're looking for a bottom at this point, especially like at around the 38 level right now. There's a lot of gap downs that are looking to be filled on the way up. I think on the just a rally back, short rally back, but I don't know. I think there's still a lot of bad news coming out. I think especially if these companies and earnings if they miss earnings, a lot of companies are laying off, and I think the big thing will be their forward guidance, and the earnings hits in the face of rising interest rates and stuff. So it's, I don't know. I don't see a lot of rainbows yet at the end of this yet, personally.
Well, when you do, you let us know, Lee. We want rainbows.
Yes, please.
Hey, Lee, is that ETF you mentioned in the platform? Do we track it?
Oh, that's Dan.
Or Dan, I'm sorry.
Yeah. I didn't catch it. He said Labo. What is it, Dan? What's the symbol?
LABU,
Hmm?
What is it?
LABU.
Oh,
Labo.
okay.
Yeah.
There
Okay.
you go.
Yeah, take a look.
I think the only good news is oil's come down some. It's under 100. So that could be helpful. Yeah. $7.
In state 7, okay. Little hint of,
Wow. Is that
Wow.
like two times or something, like a leverage?
Yeah, it's a leveraged biotech.
Oh, okay. Oh,
So how are you trading that one, Dan?
I'm sorry?
How are you trading a 2 times leveraged biotech? Are you trading it?
I'm just buying it.
You're buying it at this level? Okay,
Yeah.
okay.
Yeah, this is a quarter that I tend to look at calendar trades for the, being bullish in the fourth quarter, but not much happening through the third quarter on a lot of these stocks, because these are it's kind of like end of the year when all the fourth quarter is when chips reign supreme, so to speak, when it's going into electronic presents and stuff for the holidays. So this is time you can sell some volatility if it gets down low enough, or you can buy a calendar spread out there and just play it to the upside instead of a neutral.
pretty crazy move, huh?
I'll do one if you want and see it, just paper trade it and see how it works out and show you what I mean next time, if you like,
Mhm.
or offline if you like, Gene.
Okay, yeah, thank you.
All
I'll
right,
stop sharing, pass it
Yeah.
back to you.
okay. Thanks, Dan, Dave, Gene. Anyone else got questions? Anything? We're all fair game.
Well,
No?
y'all didn't say anything good today.
Well, oil dropped.
Yeah.
That's the only good thing I've seen.
Okay.
Yeah.
Uh,
Maybe get cheaper gas prices. So,
oh, misery. Okay, thanks, guys.
yeah,
Maybe that's a sign of a bottom, Gene.
I mean, that
Yeah, maybe.
definitely affects inflation a lot. I mean, it's the key driver, one of them at least. So, yeah, that's the only good news I got. So, all right. Well, thank you, everyone. Appreciate it. We'll close it up here, and thanks for attending.
Thank you, guys. Bye.
Thank you.
Bye, everybody.